guys feeling? It's your girl, Sophia, the Lioness, and I'm here for our masterclass tonight on the introduction on the first steps to getting started investing. So hope you guys are amazing. Definitely, grab a sheet of paper, grab a pen. We're going to go through some great information tonight, especially if you're someone who's watching this, who wants to start investing, in the stock market, in the cryptocurrency market, or just putting your money to work for you. So we're gonna let YouTube do its thing so that we can build the audience here. The replay will definitely be available right after the call. But shouts out to everyone hopping on the live. I see Pam Dialal is on the call. I see Grayson Taylor is on the call. We're gonna get this thing started in just a few moments. So while we do this, and guys, I'm gonna be honest, this is my first YouTube live stream, so bear with me, okay? I'm dealing with technology. You guys know how technology works. So I'm gonna be looking down here at my computer because this is actually where I can see your comments without having to strain my eyes to look at the phone, okay? I see New York City is on the call. Excited about the webinar. What's up? What's up? Shouts out to Sharice Bain joining us from the Bahamas. Appreciate you all for hopping on. Yes, I can definitely see the comments here on the laptop. That's a good thing, okay? Because I'm like, my eyes are gonna go really bad trying to look at it all the way over there. But guys, go ahead and grab a sheet of paper, grab a pen. I would say take a minute to go grab some water, because we're gonna be here for the next probably hour, really talking about how you can set yourself up for success when it comes to investing. Because one thing I will tell you is, you can't save your way to wealth. You definitely cannot work your way to wealth. The only way to create wealth for yourself and your family is to start to invest. Now, this call tonight, guys, I'm not a financial advisor. I'm not licensed to give financial advice. Tonight's call is just for our community to actually just educate, and I would also say entertain, okay? So do not go and take my quote me, do not go put your entire life savings in the things we're gonna talk about tonight. But I do believe that empowering each other is by educating each other. And as I learn, as I grow, my goal, my passion is really to share that information with everyone I come in contact with who wants to learn and grow as well. So I appreciate you all for hopping on. I see Derek Murray is on. Awesome, awesome, awesome. What I would also challenge you to do is share the live. Take a minute or two. We're going to start in about 2 minutes, actually, officially. Take a minute or two to send this link to 2 or 3 people you know. Maybe someone you talked about investing with in the past, or someone who's told you, wealth is something that they desire, one of their goals. Or maybe someone that you've talked about investing before with. This is a good time to revisit that conversation and say, hey, hop on this live. Let's see if you can learn anything. Okay, I see my nephew Grayson is on the call. I'm pretty sure he's our youngest viewer tonight, just turned 8 years old. And I'm pretty sure he's sitting there with his pen and paper because he loves investing. He loves learning about trading. He loves learning about stocks and crypto. So Grayson, shout out to you for being on the live tonight. But let's go ahead and dive right into it. Okay, tonight we're going to talk about investing, the power of investing, and really some basics and fundamentals to investing, right? One of the reasons that I think most people don't start to invest, and I'll be honest, that was the reason for a long time I never actually dived in and took the step to invest, is because I just thought I didn't know enough. I thought it was something that was confusing. I thought it was something I didn't understand. I thought it was difficult. I thought I needed a whole lot of money to start investing. But guys, those things are all myths. It's not true. You can start investing today with as much or as little as you have. And I want you to understand that investing isn't really difficult if you understand what you're looking at, what you're looking for, and you really have a strategy for a long-term growth plan in the market. What I want everyone to take from tonight's call is that investing is not a get-rich-quick thing, okay? It's a get-rich-for-sure thing, but it takes time, okay? Someone dropped time in the chat. If you're willing to be patient, if you're willing to give yourself enough time to actually grow and to accumulate some assets, and we're going to be able to do that together, because if you stay till the end of the live, I'm going to be sharing with you guys a community that I'm building out completely free, where we're going to be able to learn and grow and invest together over time, okay? And I'm super excited for a lot of you, because some of you are going to take the first step after this call tonight, and you're going to start building your portfolio. And, 3 years from now, 5 years from now, Some of you may never have to work a job again because you're going to take it super serious and start building out your assets and building out your portfolio. There's also going to be some of you watching this right now. You're going to listen, you're going to learn some stuff, but you're not going to take action. And that's most people. 95% of people procrastinate. Only 5% of people take action. And that's the real reason why 97% of the population is barely making it. And then you've got 3% who are living life without limits, because those are the action takers. And I hope you're one of the action takers here tonight, okay? So tonight's call is really about some of your first steps to investing in the stock market. Now, there's a ton of things you can invest in. And I want to shout out everyone on this live tonight, because the number one thing you can invest in is yourself. And you're doing that right now. You're taking an hour out of your life to hop on this call. You could be watching your favorite show. You could be Netflixing and chilling. You could be watching YouTube or scrolling TikTok. But you made a decision that, hey, I'm going to take an hour and invest in my skill set, invest in my knowledge, invest in wisdom so that you can take your life to the next level. And that's the first step. You've got to be willing to invest in you. And once you start investing in yourself, in knowledge, you're going to learn how to invest in other asset classes like stocks, like foreign exchange, like cryptocurrency, like real estate. But tonight, we're going to be focused a little bit on the stock market. If you're on the live tonight, and I like to let this thing be interactive, guys, I'm talking to you, but I want us to have a conversation. If you've ever wanted to invest in the stock market, but maybe you just didn't know much about it, or you didn't know how to get started, let me know in the comments. Go ahead and drop that in the chat. Be honest, because everyone starts somewhere. And I'm really proud of each and every one for getting on the call tonight, because you made a decision that you're going to start right now. So tonight we're going to talk about the stock market and how you can start to build a stock portfolio. Now, the first thing I want you to think about is, what is a stock? Right? What are shares? What is that? I like to keep things super simple. So here's a really simple way. And I'm glad my 8-year-old nephew is on this call, because if he can understand the concepts tonight, that means I did my job, okay? What a stock or a share is where you actually own a piece of a business or a piece of a company, okay? That's what it is. If you're buying stocks or you're buying shares in a company, you're owning a percentage or a little piece of that company. The more stocks or the more shares you buy, the more ownership you have. Does that make sense? Now, when you own a piece of those companies or a piece of this business, as an owner, you have rights to some of the profits based on the amount of the percentage of the company you own. Does that make sense? If that makes sense, drop some 7s in the comments. I want this to be a conversation, guys. If that makes sense, I need to make sure you're picking up what I'm putting down, so as we go through this class tonight, it all comes together. And at the end of this call, you can say, man, it's not as difficult as I thought. I see the 7s coming through. So a stock, a share, is owning a little piece of a company. So the stock market, guys, it's comprised of a bunch of different companies or businesses that are allowing people like you and I, investors, to invest our money to get ownership in that company. Now, another word for ownership, if you're taking notes, is equity. Okay? That's a word you're going to hear thrown around all the time. Equity. Equity means what's your percentage or how much ownership do you have in that business? And your equity is proportionate to how many shares you buy. Okay? I hope that makes sense. All right? So what is a stock? A stock is ownership in a company. How many stocks you buy determines how much ownership you have in that company. I think that's pretty clear. Grayson, if you're still on here and you understand that, put clear in the chat so I can know you understand. If you understand at 8 years old, then everyone else on this call should get it. Now, I'm going to be real, guys. If you don't understand something, in the comments, I'm looking at them, just say, Sophie, run that back. Okay? If you don't get it, just say, run it back. I'm more than happy to explain. I want to make sure everyone leaves this call tonight with clarity. I don't want you to leave confused, because a confused mind does nothing. But someone who has clarity takes massive action. And I want everyone on this call to be taking massive action after you get off the line. Okay? So our goal is to start buying stocks, buying shares in companies. Now, the next question you probably have is, okay, so what companies should I be investing in? What companies should I be buying? Well, that's a you question. You can answer that question. See, one of the rules of investing is this, and I want this to be super clear, is you want to only invest in companies that you understand and that you believe in. Only invest in companies that you understand and you believe in. So a good place to start if you're a brand new investor, if you're trying to figure out what company should you be investing in, ask yourself this question: what company do you really, really like? What companies do you really, really believe in? Some of you on this line tonight, you may say, Sophie, I really like Starbucks. I buy Starbucks every single day. If you buy $6 worth of Starbucks every morning buying a cup of coffee, I should say to you that you should own Starbucks stock. If you're on this call right now and you love sneakers, maybe you like Nike, and you buy Nike sneakers all the time. Look, I got a pair right here. Okay? You buy Nike sneakers. Well, then maybe you should buy and own Nike stock. Because if it's a business that you believe in enough that you will spend your hard-earned money buying the products, we're switching our mindset from a consumer mentality to an investor mentality and say, instead of spending money with this company, why don't I get some ownership in this company by buying shares? If you guys are understanding what I'm putting down, drop some 9s in the chat. Okay, I see someone say KFC. Marlon, right? I know you out there in the Caribbean. We love us some KFC. And I'm pretty sure KFC is a publicly traded company. Now, it mightn't be KFC, but it might be a holding company that has KFC. But I'm going to look it up just because this is a interactive call. Let's see. I see KFC Japan. But I'm pretty sure it's I think it's a brand called maybe Yummy Brands. Right? We'll look that up another day. We won't look it up now. What company owns KFC? And this is the kind of research you want to be doing in your spare time. Guys, honestly, since I actually started getting involved in investing, I don't watch a whole lot of TV anymore because I'm always using my time researching companies to see what could be profitable. Okay? The company is called Yum Brands. See, I was close. Okay? It's called Yum Brands. So if I look up Yum Brands, it's traded on the New York stock market. It actually is trading at $136 per share right now. So if you wanted one share of Yum Brands, it'll cost you $136. But here's what I want you to understand, guys. You don't have to buy a whole share in a company. You can buy what's called fractional shares, which means you can buy a piece of a share. And you can accumulate over time because you can start investing with what you have. So let's just use Yum Brands, for instance. And I see Grayson said Adidas and Lego. We're going to look those up, okay? But let's start with Yum Brands. One share of Yum Brands is $136 a share. Let's say right now your investing budget is just $100. So if you only had $100 to invest, you couldn't get a full share, but you could buy $100 worth of the brand. Because guess what? Investing is a long-term game, so you're going to have to be building your portfolio over time. And I want everyone on the call to realize something. Even the biggest investors in the world, like Warren Buffett, when they first started investing, they all started with nothing. 0 shares. But you've got to start somewhere. So tonight, everyone on this call, when we get off the call, you should be equipped with enough knowledge to be able to say, I want to go buy my first share. I don't care if you only spend $10 on something tonight. It's a start. Okay, that's the key. Remember, you don't have to be great to start, but you got to start in order to be great. And we're going to start tonight. So let's just take a look. So here's some tools if you're writing notes. One tool or website that you're going to use all the time to do research on companies, the one I use personally, and there's tons of resources out there, but the one that I use all the time is Yahoo Finance. If someone's on the chat and could type that in the chat for me. Let me see if it allows me to type it here from the, oh, I can actually type it here. Perfect. Yahoo Finance. Okay? You can go to the website directly, or you can do what I did. You can download the app. This is an app on your phone that you can actually go and look up any company, and you can find out all of the information that we're going to talk about in a few that's important to a company to see if this is something you want to invest in. Okay? So Yahoo Finance. That's a great resource for everyone to start with. As you start your investing journey, you're going to have more tools added to your tool belt, but it's a great place to start, okay? Now, Here's another thing you're going to notice. You're going to ask yourself, some companies you're going to like and you're going to look them up and you can't find them. Every company that exists is not a publicly traded company. That means that some companies aren't traded on the stock market, which means that it's not public for us to buy and invest in. Does that make sense? So some companies are private. We call that private equity. That's private ownership. And then you've got public companies. These are companies that are traded publicly on the stock market. Okay? So I saw Grayson had said earlier Adidas. Let's go to Yahoo Finance and let's look up Adidas. So is Adidas a publicly traded company? Let's see. Let's take a look. It looks like it's on the German stock market, but it's not on the NASDAQ. Let's see. Okay. ADR, let's see. I don't think it is. And that's okay, because some companies don't need to go public, guys. They've got enough money in their kitty. They don't need public people's investors, or they've got their own pool of private money. Okay, so Adidas is in there. I see another one someone dropped was Lego. I don't think Lego is there either. Okay, Lego is a private company. But guys, this is good stuff to know, right? Lego is a private company. Okay, let's look up Nike for a second. Let's take a look at Nike. Nike is publicly traded. Nike is $100.27 per share. So I want you guys to think about something and how we can really start changing our mindset from consumer to investor. The average pair of shoes on Nike's website is more than $100. So instead of buying a pair of shoes, you can actually buy a share in Nike. So instead of buying 3 pairs of shoes this year for $300, you could buy 3 shares in the company and be a part owner in Nike for $300. Do you see how the difference? It's a mentality difference. Okay, so some companies are privately traded, some companies are publicly traded. The ones that we can invest in are publicly traded companies. Okay, now here's another term that I want you to get familiar with that you probably heard before. Maybe you don't really understand what it means, but you may have seen it on CNBC or you've seen it in a newspaper, and it's an IPO. Okay, IPO. What is an IPO? An IPO is an initial public offering. What does that mean? When a company has an IPO, it means that the company is going public, which means it's going to go be listed on the stock market so that it can be publicly traded. So there's some companies like, I don't know if you guys know DoorDash. Y'all know the app DoorDash where you order food? Well, DoorDash recently went public. They had an IPO, which means they were a privately owned company, but they wanted to go public. Now, why does a company go public? Here's the short answer. Companies go public because they want investors. They want investors to buy shares in their company because now they're able to get that cash, that capital to go and grow the business. So let's say DoorDash was doing good all these years, but they want to grow. They want to scale. They want to be able to do more things, build more infrastructure, get better software. That requires money, capital. What's the best way to get capital is to get it and raise it from investors. So by going public on the stock market, regular people like you and I, and then big institutions like banks invest in these companies, and they're able to get that liquidation or cash so that they can operate and grow their business. If this is making sense so far, guys, put making sense in the chat. I want to make sure you guys are picking up what I'm putting down. So that's the reason why companies go public. Some companies never go public. But when you see companies go public, it's because that company is typically ready to scale. It's ready to grow. Maybe they want to open more locations. The reason that a company like Starbucks is on every other block in the world isn't because the owner of Starbucks is so rich. It's because they were able to raise money to grow and scale the business. Okay? So when you look at companies that are publicly traded, they're using other people's money to grow the business. But because you've invested your money because you believed in that company, as the company performs well and becomes profitable, you're owner in the company, so you are entitled to revenue. You're entitled to profits from the company as well. Okay? And that's why investing is so important, and is why it's so important that you actually invest in companies you believe in, because you only want to invest in companies you think are going to continue to grow. For instance, on the flip side, because I read financial articles all day long. Okay. I'm an entrepreneur, y'all, but for the past year, I've been actually working at an investment bank, and I've been learning a lot. And one of my tasks every day is to read Yahoo Finance, read Bloomberg, read the Wall Street Journal. And I'm learning about news and things that's happening not only in the economy, but in companies. And one company that's been in the news a lot lately, and you guys are probably familiar with it, is Boeing, which is the airplane company. Y'all know Boeing, who makes the jets? Well, Boeing has been having a lot of issues. The main one was on that Alaska Airlines flight a couple of months ago or weeks ago, when the door flew open in the middle of the flight. If you guys know what I'm talking about, drop some nines in the chat, right? When they had a door that they plugged, wasn't plugged good, mid-flight, the whole door flew off with people on it. Do y'all remember that happening? Well, that was one incident for Boeing on one of their model of their planes. But since that's happened, there's been a lot of issues with Boeing. They're having a bunch of different issues. Last week, one of the pilots' chair moved mid-flight and the whole plane nosedived and 50 people hit the roof. It's been some freaky stuff happening with Boeing. And it's been like a couple of weeks and there's been bad news about Boeing. So for me, with an investor mindset, I'm like, listen, Boeing ain't a company I want to buy right now because they're having so much bad news that the stock has been dropping. The stock has actually been going down. The company is being devalued because people are losing faith in the business. So I wouldn't go right now and buy Boeing stock because right now Boeing ain't doing too good. Does this make sense? Does this make sense? So you want to make sure that if you're going to be putting your hard-earned money in companies, you at least understand the business model, understand if they're doing well, understand if, you know, what news is coming out. Here's another thing, Apple, okay? Anyone on here have an iPhone? Most of you probably watching me on an iPhone or an iPad right now. Well, Apple is one of the biggest companies or highest valued companies in the world. And the reason is because people believe in Apple. It's very rare that Apple gives a bad product. Do you believe Apple is here to stay? I do. Would I invest in Apple? Well, I would invest in Apple because I believe that the company is a stable company. So I don't believe I'm going to lose money in Apple. But the reason that I won't put a majority of my capital in Apple right now isn't because it isn't a great company. It's a safe company. But when you think about it, most of the growth has already happened. Apple's not going to double in price in the next 12 months. It might go up $1 or $2. It may stay stable, but it's not going to have massive growth. Most of that growth has already happened, but it's a safe investment. You've got some companies called the Magnificent Seven. I don't know them all off the top of my head, but that's like Apple, Google, Meta, Facebook, right? Tesla, Amazon. These are companies they're mega companies. They're here to stay. It's a safe place for you to invest. So if you want to start investing, I would say invest in those. It's safe money. You're going to be able to make more money on your investments in a year than the banks would give you. I want everyone to remember this. The banks are only giving you 0.008% interest on money you put in the bank. 0.008. That's nothing. That's pennies on the dollar. Whereas, right, the stock market on average gives about 10% annually on your money. So if you have an opportunity to put your money in the bank and make 0.08%, or you can invest it in the stock market conservatively and make 10%, which one would you choose? I'm sure all y'all say in the stock market every time, right? No brainer. So why aren't more of us investing? Because no one ever took the time to break it down to us, to show us that it's simple and show us how to do it, okay? So you want to always understand the business or the company you're investing in, all right? Now, here's another thing I want you to understand. There's something called indexes. If you're brand new to investing, okay, indexes are something you want to look at. Write this down on your sheet of paper. Indexes and ETFs. ETFs, okay? So what's an index? An index is kind of like a collection of companies all in one basket. So I want you to think about it like this. You have a basket, and instead of investing in only Apple, instead of investing in only Facebook, you can invest in a basket that holds a lot of different companies. So what that means is, if, let's say, Apple performs well this year, Tesla performs well this year, and you're holding them individually, you'll make money. But let's say you've got Meta stock, and Meta doesn't do good. Maybe they get hit with a lawsuit, and they do bad, and you're only holding Meta stock. Guess what? You're going to be, your equity in that company is going to go down because the company's value went down. But if you're in an index that has a collection or a basket of companies, now you're safe, because if Meta goes down and Google goes up and you hold the ETF that has them both, you're kind of balancing out. Does that make sense? So an ETF or an index is a safe place for someone new. If you don't know which specific companies you want to buy in the beginning, but just to get your feet wet, I would say go ahead and start investing in indexes and ETFs. Here are 3 indexes that I want you to do some homework and research, okay? The first one is called the S&P 500. S&P 500. That is the 500 the 500 top companies, in the U.S. Okay? The 500 top companies in the U.S. Then you've got something called the NASDAQ. You probably heard it on the news, but you're like, what are they talking about? The NASDAQ. Well, what the NASDAQ is the top 100 technology companies. So it's tech companies. That means it's going to be like software companies like Google and Meta and NVIDIA, and it's tech companies. Okay? So the S&P 500 is the top 500 companies in the US, all different industries. The NASDAQ is the top 100 technology companies. And then you've got one called the Dow Jones. I know y'all heard these terms before. Y'all see it on the little ticker symbol at the bottom of the TV when you're watching the news, but you don't pay attention to it. Well, the Dow Jones is the top, okay? The Dow Jones is the top 30 companies. That's like Coca-Cola, Google again, Meta, Tesla, Amazon, okay? These are the top companies. So if you don't know which companies yet you want to invest in, this is a good place to start, okay? Now, what is an ETF? An ETF now takes, it's based by banks and major financial investors who actually pick stocks for you, and they put them in a basket, and you're able to buy that ETF. So you can go ahead and buy, like, let's just say now you want a technology ETF. You want technology companies. You can go and pick a technology company like QQQ. And don't quote, guys, you got to do your homework. And we're going to keep doing these lives so that we can keep getting deeper and deeper. But I just want you to understand the terminology and what these things are. If you understand right now what an ETF is, if you kind of understand what an index is, let me know. It's just a basket or a collection of stocks, okay? That's already predetermined for you. You don't have to individually pick stocks. But where the money is really going to be made is by you being able to find a company that's undervalued now, invest in it, and as it grows, you're able to grow with it and see your money grow. Now, there are something called blue chip stocks, okay? Is this too much for you guys, or is this good information? Is this good information, or is this too much? Shout out to everyone sticking on the call. I love it, I love it, I love it. This is good information, guys. When you really grasp this whole thing, you're going to be like, man, I got to start investing. Now, everything outside of my bills, I don't really want to spend money anymore. I used to spend money stupidly. I used to just go out. I like to eat out, y'all. I ain't going to lie. I'm a little older now, so I don't really party anymore, but I do like a good meal. And food is expensive. So I would go out to eat a lot. But now I'm like, I would prefer to sacrifice a meal to be able to invest for the next 2 to 3 years aggressively, and then I'll be able to eat out every day after that. So it's delayed gratification, okay? It's delayed gratification. There's something called blue chip stocks. And all this is these are companies that are like old companies that are low risk, but they don't really have high growth. They're safe. These are your Coca-Colas. These are your Disneys. This is Walmart. This is AT&T. Companies like this, right? They've been around forever. They're low risk. Your money's safe there. But oftentimes they pay dividends. And what's dividends? This is when the company actually pays you a little bit of income, passive income, for holding that stock. And we'll talk about dividends on another call, okay? Just know that blue chip stocks are the big boy companies that's been around forever that are low risk. But remember, anywhere is better to invest your money than parking it in a bank account. We've been bamboozled. We've been hoodwinked that we should put our money in the bank. Y'all, your money is not growing in the bank. It's just staying stagnant and actually losing value because the cost of living is going up. So you're actually losing money. You want to put your money somewhere that's outpacing inflation. And that's in the stock market. That's in some type of investment. Okay? Cool? So let's talk a little bit about, equity and cash. And this is something that's super important for investors because this is where people get confused most of the time. Remember when you buy shares or you buy stocks in these companies, your part ownership. Remember that ownership is called equity, right? What's the difference between equity and cash? Here's the main difference. When you buy a stock, when you buy shares in a company, and that company goes up in value, your equity increases as well, okay? So let's say you buy Nike stock today at $100, and tomorrow Nike's stock is $150. Guess what? Your 100 you invested now became 150. So you got $50 equity because the value of the company went up, so your money increased as well. You guys follow me? Now, on the flip side of that, let's say a company doesn't perform well. And let's say you buy Nike stock today for $100, and tomorrow Nike doesn't perform well, and Nike's stock is at $90. So you've lost equity in that investment. But here's what I need you to understand, guys. You never actually lose money until you sell the stock. So even though you invested $100, okay, you invested $100, right now your equity is 90. If you do not sell the stock, that's okay because guess what? A week from now, Nike stock may jump to 120. Now you're back at 120. The only way you lose money for real is if you sell the stock at a lower price than when you bought it. Does that make sense? Now, does that mean you hold a stock forever? No. You're going to learn exit strategies, when to enter, when to exit. But I just want you to make that clear is that if you buy a company today and tomorrow the stock drops, don't panic. You've lost equity, but you haven't lost cash. The only way you lose cash is how? You've got to actually sell the stock. As long as you hold on to it, your equity it ebbs and flows. It goes up and down. Stock market goes up and down every single day. Okay? Does that make sense? If you guys follow me, I need to make sure that concept right there is crystal clear. Follow me? Let me know if you follow me. If that's good, drop some ones in the chat. I see someone say, this is good information. Never too much. You always have to get smarter. I love it. I love it. I love it. Okay? I love it. Melissa, no problem. You're glad you joined us now. You can always catch the beginning, at the end of the live. Okay, cool. So you only lose money or cash when you sell the stock. Don't worry if your equity drops. Okay? Now, here's the question. When is the right time to sell a stock? This is important. When is the right time to sell a stock? There's two scenarios. One is if you buy in at a company at a certain price and it goes all the way up. Okay, and you want to take some profit, sell it. So what's an example? Let's say you buy Nike stock for $100 and Nike stock tomorrow is $200. You just doubled your investment. That might be a good time to take profits and sell so you can get your profits. You can always get back in the market, guys. One of my biggest mistakes I made when I was investing in crypto a couple of years ago because I was learning, I was getting my feet wet. I didn't know. I was in crypto and basically the investment, I had a 500% growth. So let's say I'd invested $500 in a particular stock. Well, I had invested $500 in Bitcoin. And the price of Bitcoin at the time was $10,000 a coin. Bitcoin went to $50,000 a coin. My 500 had grown to 2,500. But guess what? I kept thinking it was going to go to $1 million and I did not sell. So I didn't take any profits. Guess what happened? The market crashed and that thing went right back down to 13,000. But I didn't lose cash because I didn't sell the asset, but I could have taken profit. Do you guys understand? So you've got to make a decision. And as you learn and as you grow and as you become a more seasoned investor, you're going to know what your targets are. There's no bank that's going to ever double your money. There's something called the rule of 72. Okay, and I know this is a little much, but I just want to put this in your air. The rule of 72 is something called the banker's secret. This tells you how long it takes for your money to invest at a certain interest rate. So someone do the math. At least you don't even got to do the math. Banks are giving you less than 1%. They're giving you close to 0%. But let's just say you found a nice bank that was giving 1% that you won't find. Okay? And let's say you had $1,000 in the bank. The rule of 72 says you divide 72 divided by the interest rate. And it'll tell you how many years it'll take to double. So if you have a bank that's paying you 1%, which I'm sure you don't because they don't even give us that, your money will take 72 years to double. So it'll take you 72 years. You'll be dead before your 1,000 becomes 2,000 in a bank. Think about that for a second. Think about that. But this is where they've been teaching us our whole life to put our money, when our money will never grow. So you want to find things that's going to grow at 10%, 12%, 20% interest. Because think about it this way. If you find an investment that's growing by 20%, the stock market on average grows 10% a year. And you have your money invested in the stock market. 72 divided by 10 is what? 7 years. It's going to take you about 7 years for your money to double in the stock market, whereas the bank, will take you a lifetime. Does that make sense? Now do you see why you need to be invested? Some of these investments are growing 50%, 100%, 500%. And as you get more savvy with this, okay, and like I said, I'm going to tell you guys about a community where we're going to be researching stocks and companies together. And you're going to start to find out what companies have massive growth potential. I'm speaking this into existence right now. In the next 3 to 5 years, I will make $1 million in the stock market, investing $500 per month. How? Because I understand, one, instead of spending that $500 a month on foolishness, if I invest that over time and I hit a couple home runs with a couple growth companies, that's 1,000% growth, it's got to happen. It can happen for every single one of us. And I want us to do it together. Okay? And like I said, I'm starting a free community where you can be a part of it and be able to get access to the information and get calls like this. All right? So you can either sell the stock when it's at a high and you can cash out and take profits, or the second time it's a good sign to sell a stock is if the company starts performing bad. Like Boeing. If I owned Boeing stock, and with all the stuff that's been happening right now, I would have done sold it. Because the stock price is going to keep going down because more and more stuff, more and more bad news is happening. Okay? More and more stuff is going to keep happening with Boeing. I believe the stock price is going to keep going down. So I want to sell so I don't lose money. Does that make sense? So either when you are in massive profits, or when the company starts to decline. Okay, companies get hit with a lawsuit. Some scandal happens with the owner. These are signs that you might want to get out of that company. Okay, and that's why it's going to be important for you to start reading. You're going to have to start paying attention to the news when you start investing. The news is going to become more important to you, not because you just want to see what's happening, because you want to understand what's happening with your money. If you start to hear about products and services or companies that are doing incredible things, you should be hitting Yahoo Finance to find out, hey, how can I get some shares in that company? Because I think it's going to be a big deal. Okay, and I'll give you guys 2 stock picks, for entertainment purposes only, that I believe long-term is going to be massive, and it's undervalued right now, and every single one of us can be able to get 100 shares in the next few months for a couple $100. That sound fair enough? Okay, so let's talk about researching stocks. Let's talk about researching stocks. Yahoo Finance is going to be that tool. Now, when you're researching stocks, or what's the things you need to know when you want to go look up a company? Well, first, you need to know the name of the company. And then once you look up the name of the company, you can literally Google ticker symbol. Okay? I'll drop it in the chat. A ticker symbol. That's the little, 3 or 4 letter code that's always on the bottom of the screen when you're watching CNN. That's called a ticker symbol. So like Apple's ticker symbol is AAPL, right? Google, their ticker symbol is GOOG. You don't have to memorize these. Just go to Google. Put in Nike's ticker symbol. Their ticker symbol is actually Nike, right? Let's say you wanted to know Tesla. It's TSLA. So if you want to go and do any research on a company, you want to go to Google and put the company's name and their ticker symbol. And it'll tell you the ticker symbol. Then you can take that ticker symbol to Yahoo Finance and go crazy. Once you find a company on Yahoo Finance, it gives you all the information you need. Okay? Now, as you get more experience, some of these numbers are going to make more sense to you. But there's a couple things you want to know about a company to know if it's a good company. Okay? Write these 3 things down. These are the very basics. You want to know, does the company have more cash than debt? Okay? Does it have more cash than debt? Because you don't want to be buying shares in a company that is drowning in debt. That's not a good sign of a good business. Just like us in our personal finance, if a person has a lot of debt, that means they're not too financially sound. You want some